Netflix just reported quarterly earnings, and they beat all over the place. They are up about 4% after hours right now. They were expected to do $5.11 in earnings per share. They did $5.40. They were expected to do $9.77 billion in revenue. They did $9.83 billion, and this is a big number. The subscribers, 5.07 million subscribers added in the quarter. The expectation from Wall Street was 4 million subscribers. That's a lot. And remember, just go back 18 months, 24 months when people were really worried about where Netflix was going to go because of password sharing and the crackdown and everything. It seems like there's a lot of people out there, we could probably pull up that information, that are going with the ads for the Netflix subscription. I mean, I think it was 4 minutes of ads every 60 minutes of watch time or something like that. But even, guys, if you look back at this was in 2000. Well, let's go back here. Let's go to 2021. October of 2021. They were at a high of $690 a share. That was October of 21. Then you come over here. This was just a short time after, June of 22. That's 8 months. They were at $164 a share on the low. And I remember during this big steep decline right here, there was a very, very well-known hedge fund manager that you may know. His name is Bill Ackman. He said, I'm wrong. I was wrong on it. I went long on it. I was wrong. They're kind of dead. Well, look where they're at. They are back up to $714 a share. Guys, as Paul always says, news follows the stock price. This was the worst news in the world. Worst news in the world. That Netflix was dead. And then look at this rebound, all back to glory. So still up about 4%. Let's go over to their press release and see. Revenue grew 15% year over year. Operating margin was 30% versus 22% last year. That is a massive, massive jump in operating margin. For 2024, we expect revenue growth of 15%, the high end of our 14 to 15% range. Operating margin of 27%. They have upgraded that from 26%. We delivered a string of new hits this quarter. Let's see, do I recognize any of these? Emily in Paris, never seen it. Well, I've never seen any of these, so all I'm waiting for is Squid Games 2 to come out day before or after Christmas. I'm also really excited about that documentary about the Yankees and Red Sox back in 2004. Was it 2004? 4. I think so. That was when the Red Sox won the World Series, yeah. Engagement, our best proxy for member happiness, remains healthy through the first 3 quarters of 2024. View hours per member amongst households, the clearest view of engagement, increased year over year. Ads membership, here we go. This is what I was talking about. Ads membership was up 35% quarter on quarter. I know they have games now. Oh, here we go. Q4, this is what's coming. Squid Games 2. Oh, the Jake Paul and Mike Tyson fight. That's going to be interesting. That's going to be a live stream. 2 games on Christmas Day. So they're getting into the NFL. And here's your breakdown, guys. Look at this. Year over year. I mean, look at these numbers and look at the forecasts. They just continue to forecast strong revenue growth. Continue to forecast. Operating margin is expected to be a touch down. Okay. Interesting. Paid members. They're not forecasting paid members. That's interesting, but you can see the year over year growth. Now, the year over year growth, if you look over the last few quarters, is slowing. 12.8, 16, 16.5, 14.4. So it's slowing, but I think at some point, I mean, this is still, for as big as they are, this is still a really good number. I think if they can sustain around this 14 to, actually probably call it 13.5 to 16.5 range, I think that's a really good area to sit in where I'm not worried. I mean, if they get down to this 10.8, that's where I might be getting a little bit worried. But free cash flow, super high. Oh my goodness. They're higher than the first quarter of 2024. Let's continue on. This is the first time I'm going through this. We're improving our product in AP. This is the Asian Pacific area. Content slate in Japan. Great. So 19% year over year. Let's see the forecast. Actually, before we go to forecast. Okay, 3.5% about. Forecast. The quarterly guidance we provide is actual internal forecast we report. Our forecast is 15% revenue growth, 17% on full year neutral basis. Do I see anything else in here? Engagement and content. with our audience of 600 million plus growing subscribers with a 14.4% growth rate. Guys, that is absolutely incredible. We're programming for more tastes and cultures. I have noticed they have some interesting stuff out on Netflix. I mean, there is stuff on Netflix. Now, guys, I have been using Netflix since the DVD days. I don't know if a lot of you younger people probably won't remember it, but people that are probably in their mid-30s probably remember the DVDs. You would literally sign up for Netflix. They would send you a DVD in the mail, and then you would watch the DVD, and you would send it back, and then they would send you another one. You could get like 5 DVDs per month or something. And I remember when the app came out, and I think it was like on the iPhone 3GS or the iPhone 4. Maybe it was the iPhone 4S. It was very early on, but I remember being able to watch Netflix on my phone. It was incredible to think where they're at now versus where they were a decade ago. Actually, that was probably 2012, 2013, somewhere in there. But man, no, that was probably even sooner. Unbelievable. But guys, let's go over here real quick. I just want to look at a couple of things as far as the financials go. I want to go to the income statement. Let's look at them on an annual basis. So during COVID, they did get a relatively big jump because people were sitting home. So they went from about $15 billion in revenue to about $30 billion in revenue in that COVID time. That always worried me. It always worried me, and also how they amortize their shows and this and that. But this jump worried me. You can see that growth is now steady. 31 billion, 33 billion, 36 billion over the last 12 months. So that, to me, they're at a normal pace. You've heard me say in a million videos, I don't like the COVID jump is fine, but where are they going to stabilize? I think that Netflix has stabilized. I think that they have gotten to a really good place where they have stabilized. Their numbers, their growth numbers as far as subscribers are really showing that. Net income, you could see huge jumps in net income. This one, again, I think it's slow, stable growth. Let's see what they're doing with their shares. They're buying back shares. Don't love that. I would have preferred that they were buying back shares in here. 2022, they bought back some shares here. This is where they were diluting shares. I mean, what are you doing? When you guys were $161 a share, maybe they weren't a great price at the time, or a great value at the time, I should say. But for me, it would be hard to get behind paying for something with a 64 PE. Now, I will say, I do think Netflix is as moat as you can get in the space of streaming. I do not consider them a moat. But if I had to put it on a scale of moat being a 1 in 10, they're probably up there being a 10. But at the same point, there are so many other options out there. You have Amazon, which is terrible. You have Apple TV, which is pretty terrible. You have Hulu, which is not bad. Peacock is pretty good. So you have these other options out there, but the fact that they're getting into streaming live events, they're getting into the NFL, I'm sure they're going to get into other major sports, but this UFC thing is pretty, well, it's not UFC. I bet they'll get into UFC, don't you think? With Dana White? Yeah. So Netflix is now still up 4%. Guys, yes, I think this is overvalued right now based on the numbers that I'm seeing, but this is absolutely a company that is worth paying attention to for the long term, especially if you get one of those very, very large pullbacks again. So if you like content like this, quick earnings reactions, put it in the comment below. Tell me what you think about Netflix. Have a great day.